Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back to another day of Tesla analysis. Today we will take a look at Tesla technical analysis, but we'll also listen to some of the statements that Elon made during the earnings call and attempt to explain as to why the stock tanked so badly right after earnings. In my opinion, this is a great opportunity to buy Tesla stock. And if you are also a trader, this is also a good opportunity to look at call options, especially leap call options for a few years out. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Thank you very much, and let's get right into it. If you'd like to talk to me directly, consider joining my Patreon page as well. There I post my Tesla analysis on a very regular basis, almost daily basis. I would map out all of the pivot points in the morning, as well as my trading strategy for that particular day. The most important part is where I think we are catching the bottom. I will be sharing with my patrons the certain price points at which point entry would be excellent. And so if you are interested in that, feel free to click the link down below and join my Patreon page. Given the recent macroeconomics environment and Tesla's most recent earnings call, the stock has been moving down drastically from $12.43 at peak down to, as of the end of Friday, was $846. I want to take the opportunity to remind us, Tesla shareholders, of the 4 most recent drops in Tesla and what the stock does right after that, right? So the first drop that I have here was in February of 2020 when the stock was at $191. This is all split adjusted. And because of the pandemic, as of March 2020, the stock dropped down to $70. That represents a 63% drop within a 4-week period. The subsequent months, in July of 2020, Tesla at the height was at around $360. That represents a 514% run from the bottom here. Okay, so then the subsequent drop, it dropped from $360 down to $270 just in about 2 weeks timeline here. Then the week after, also in the month of July, it dropped down to $270, only to go back up right around August of 2020 at $503, representing a 86% increase. After that, it dropped from $503 down to about $330. That represents a 34% drop, only to consolidate and then go back up as of January of 2020 at around $885. That represents a 268% increase from September of 2020 to December 2020 or January of 2021. Then subsequent to that, it dropped from the height of about $900 down to $540. That represents a 40% drop here in the month of January through March of 2021. And then from January 2021 all the way to October of 2021, it got all the way to $12.43. That represents a 345% increase. So those are the summary of Tesla major drops in the last 2 years. And every time that it dropped between 25 to 40%, it always make it back 3 to 4 to 5 times higher. So right now from $12.43 at the recent all-time high and a drop down to about round number $800 on Friday, it represents about a 36% drop. Okay, if Tesla were to make it back 3 times as much as it was on Friday, so 800, it could get to about 2,400 in the next run. Even if it just make it back to about 100% of where it was on Friday, that would make the stock at $1,600. So this to give us perspective and comfort that Tesla comes down vigorously as a matter of volatility, but Tesla will always make it back. And if you really trace the history of Tesla before 2020, you will see that Tesla also witnessed so many other drops along the way, and it hasn't really increased as dramatically as the last 2 years, but it always make it ways back. So this is to encourage all of the Tesla shareholders out there to stay strong. You know that Tesla will make it back stronger than before. And especially when it seems like doom and gloom like this, when it seems like there's no bottom and everybody's selling Tesla to run for the exit, this is an opportunity to buy. So this is a part in the Q&A session of the earnings call that caused so much headache and noise among the Wall Street analyst community and was believed to be one of the main reasons attributable to Tesla stock price.
Thank you very much. Let's go to the Q&A from the investor side. The first question was on 4680 cells, which we already answered. So let's go to the second question. How is the progress of the $25,000 compact car? Can you give an update?
Well, we're not currently working on that $25,000 car. We, at some point we will, but we have enough on our plate right now. Too much on our plate, frankly. So, at some point there will be. But I think that's sort of a question that it's sort of the wrong question, really. It's really the thing that overwhelmingly matters is when is the car autonomous? At the point at which is autonomous, the cost of transport drops by, I don't know, a factor of 4 or 5.
So as you know, after what we think to be an excellent and a fantastic quarter for Tesla, Tesla's stock price moved down by 11.5%. A lot of non-serious Tesla investor would be wary and wondering if it's an opportunity to sell. What is troubling to me is that a lot of investors, and including Wall Street, fail to recognize that Tesla is yielding about 30.6% in automotive gross margin. And this is a phenomenal number. Let me share with you how Tesla get to this number. So let me break that down. Cost of goods sold, or in this particular case, cost of automotive revenue here, is a combination of direct labor, direct material, and overhead. Overhead usually includes things like utilities, rent, depreciation, and so on and so forth. So all of those is the cost incurred to make that particular vehicle. And for every single vehicle that it sells, almost one third of the selling price is going back to Tesla's pocket for profit. And that is an astounding number. As Tesla scale up in production, the gross profit margin should only get bigger and bigger. Right now, Tesla has between 3 to 6 months of wait time for all of its cars, especially Model Y and Model 3. Why would Tesla want to produce a $25,000 car and compress that margin? Demand is there, right? So of course, at $25,000, Tesla can penetrate a different market. Tesla could sell cars to a lot of other people at $25,000, but even though the volume increase, the margin gets compressed, and that is not good for shareholders. So the fact that Tesla does not want to come out with a $25,000 car, actually, that's a very good thing for shareholders. And I think Wall Street fails to recognize that. Of course, in terms of brand equity and penetration, the more cars Tesla can sell, the more consumers that use and know of Tesla brand, the better from a brand equity standpoint. However, it will hurt the bottom line of Tesla shareholders. And so if Wall Street analysts look at Tesla from a brand penetration standpoint, sure, it could hurt Tesla if it doesn't come out with a $25,000 car fast enough. But from a profit margin standpoint, there is no reason to come out with a $25,000 car now. It's almost like the Toyota Camry is running really well right now. Everyone wants to buy a Toyota Camry. Why would you introduce a Toyota Corolla? Of course, the Toyota Corolla will get you more market shares. More people will buy a Corolla because the price point is lower. But why would you do that when the whole world wants to buy a Camry right now? When you get to a maturity point and the market getting even more saturated with EV, that's the opportunity to bring out the $25,000 car. Right now, Tesla's barely scratching the surface. It hasn't even gotten 5% of the vehicle market of the United States yet. Why would it bring out a $25,000 car in the next couple of years, thereby decreasing the profit margin that it has? But 5 years from now, 10 years from now, when the EV adoption rates get much better, and when we get to about 50 to 60% EV adoption rate, then $25,000 car could entice more people to buy a Tesla car, right? The one thing that I have to be cautious for Tesla is that if it does not come out with the 25,000 cars soon enough, it will leave room for competitors to go in to grab that market. Because you can see that Lucid is grabbing the top of the line market, right? The luxury market. Rivian is going to right now getting the middle level market, which are the ones that are buying the Model Y and Model 3 from Tesla. They have a possible alternative to choose from, which is the R1S, right? Although that one scaling up production is still a huge problem. Right now, aside from BYD in China, there is not yet any player in the US that is tackling the lower level market, which is a $25,000 car. One day, soon enough, you will start seeing competitors coming into that market, and it's going to be between 3 to 5 years before anyone has a chance at getting the technology that is cheap enough to make a car that will make money at $25,000, right? But somebody will figure it out, and consumers will probably pay for less range in exchange for less money, right? If Tesla doesn't tackle that market soon enough, it could potentially give room for another competitor to come in. That's the only defensive reason why Tesla would have to go to market with a $25,000 car faster. But other than that, in the next 3 to 5 years, I don't think that is a problem for Tesla. And so while Elon Musk might have gone about it explaining it poorly to the analysts out there, I think he has an excellent point. He has too many things on his plate. Why would Tesla resource be focused on a car that yields so much lower in margin where there's plenty of demand at the S and X and 3 and Y level? So here's the daily chart for Tesla. The daily candle on Friday was really encouraging. Tesla dipped down below 200 days SMA, which was $813, represented by the red line here. And the current point of that red line is represented by the dotted red line here. So Tesla dipped down to about $792, right below 200 days SMA, and then bounced back really hard. And it ended the day well above 200 days SMA. It ended the day and the week at $846. So this is definitely a good sign for the bulls. This is an initial sign of reversal. It doesn't necessarily confirm reversal. We need to see Monday and the next couple of days to see whether the bullish reversal is confirmed, but it is certainly encouraging. So if you are part of my Patreon group, I had mentioned that the range between $799 and $811 is the range that I would be enter call options for Tesla. Sure, it dipped down to $792, which was well below $799, but in ballpark, I believe that that would be where Tesla found the bottom. Now, there's always a chance that Tesla could not hold 799 or 800. There's always a chance that Tesla could not hold 200 days SMA and then hit the floor further, but we will reevaluate when Tesla could not hold 200 days SMA. But anytime a stock loses 200 days SMA coming from all the way above 50 days SMA like this is always an opportunity for the stock to bounce. We will have to wait until tomorrow, Monday, January the 31st, to determine whether or not Tesla can sustain this reversal and go all the way back up to 100 days SMA, which is at $961 currently. For Tesla to resume bullish, I would like to see Tesla first get back to 100 days SMA, 961, and then reclaim 50 days SMA, which is the white dotted line here, at $1,035. And you know, that is almost $200 from here. That sounds too good to be true and may not be able to accomplish in the coming week. But I think for Tesla to reclaim bullishness, it needs to stay above 1035. Right now, the daily chart does not look too promising. I still think that Tesla will bounce at one point in the future. The question is when. If you are shareholders, there's no reason to be concerned. Just buy and hold long term. If you are a trader, you're walking the fine line between a bullish reversal or a bearish continuation. Now, if on Monday Tesla fall below $813, which is now the 200 days SMA, and remain below 200 days SMA, then I would say the Tesla is not going to be bullish anytime soon. The encouraging factor, however, is that on Friday, the volume was 160%, which is higher than average, but also the vast majority of the volume was buy volume, evidenced in the green portion of the bar here. The RSI also hit oversold for the last couple of days and start tipping back up, which signals buyers coming in. The selling pressure started to be relieved a little bit. But let's not kid ourselves. Wall Street is unforgiving to Tesla share. But let's not kid ourselves. Wall Street is totally unforgiving to Elon Musk and his statements, right? Quite frankly, as shareholders, I don't really care what Wall Street is thinking about Tesla. Tesla is Tesla. There's a reason why Wall Street analysts do not get Tesla. But it is important to explain what has been going on with the stock and to put that in perspective in the lens of the Wall Street analysts, right? So from a technical standpoint, I would like to see Tesla get back up to 1035 before it has any hope of surpassing previous all-time high. Now, with the rate that Tesla has been producing, with 2 gigafactories that are ramping up in the next couple of weeks here, I think it is just a matter of time before Tesla gets to about 1.5 to 1.6 million vehicles delivered this year. I'm super ambitious. I think Tesla could get to 2 million this year. With 2021 production and the lack of new factories, doubling 2020 number was really difficult because you only relied on Fremont and Shanghai to do the heavy lifting, right? And those are established existing factories, especially with Fremont. It's a much older facility. Adding capacity or increasing efficiency to have additional vehicles production is much harder. In 2022, however, we have 2 brand new, fully capable gigafactories, Berlin and Austin, that are ramping. And the faster these 2 factories ramp, the more production Tesla can have and the more vehicles Tesla can deliver. So I think doubling delivery numbers for 2021 in 2022 is a lot easier than doing so between 2020 and 2021, if you understand my point there. Here's the 30-minute chart for Tesla. The top pivot line is 872. The middle pivot point is 832. And the bottom pivot point is $766. Between the middle and the bottom pivot point, we have 200 days SMA at $813. So it is quite likely that Tesla could retest $813 again, or even the low of Friday again before bouncing back up. I don't know if Tesla will get all the way down to the bottom pivot point here. It depends on macroeconomics environment, but I think that if it does get there, that's even a better opportunity to add shares or call options. In my mind, if Tesla revisit the downside, it will probably stop at $813. If you are looking at leap call options for the next few years, I'm showing here January 2024, which is the farthest date that we have. We are looking at, let's say, 1,100 strike price for January 2024. You're looking at about $22,000. That is not too terrible for a 2 years of expiration, and we know Tesla's years is almost like dog years. In 2 years, Tesla could do a lot of things. and could show us amazing numbers by the end of 2022 and again 2023. So 1100 strike price is very safe in my opinion for January 2024. If you want to be a little bit more aggressive, you could be looking at about $1,300. That is about $18,000 to $19,000 here. The spread is not too huge between $1,100 and $1,300 at the moment. So you probably want to stay closer to the money at $1,100. You would spend about $2,000 to $3,000 more, and you get so much closer to the money. Although I think Tesla will take out both price target, whether it's $1,100 or $1,200 or $1,300. If you are looking for something closer in terms of expiration, I would look at maybe December 2022. Although at that point you might as well just go for January 2023. But let's take a look at December to see 1,300 strike price is right now at around 7,500, give or take. It's a really decent odd, right? You have until the end of the year for Tesla to see whether or not it can successfully ramp up Berlin and Austin, and if so, at what rate of capacity Tesla would be running. So $1,300 is not too far from previous all-time high, and if Tesla runs up and double its current price at $800 to $1,600, that is going to be a very handsome profit.